Good morning, everybody, and welcome to today's episode of Derek Invest. I'm your host, Derek Miller. What we're going to talk about today are the top 7 companies using artificial intelligence towards customer service that has some relatability to a refund, to your money, to finances. And I'll tell you why. Because from what I have seen from artificial intelligence, it is absolutely nowhere near what we're being told. That's what I can tell. I've shared my experience before, but I'll quickly do it again. It's with Airbnb. They still owe me $3,500. I firmly believe that a lot of the customer service that you're talking to after business hours in the United States is not customer service in some foreign country. It is, in fact, a crappy piece of AI that has a very thick accent to cover up the fact that it has no idea about what your problems are and the impact of the statements that are being made to you. For example, Airbnb owes me $3,500. I have spoken to people over a matter of 6 weeks trying to get this corrected. They did it in the form of a coupon that they put on the back end of a stay that had to be canceled. That stay had to be canceled because the owner of the Airbnb did not have it ready and available. But because they put the coupon in the back of the stay, meaning the last month of the stay, the coupon got canceled along with the stay itself. They still have not refunded me the $3,500. This was 3 months ago. I've taken a break from it because it still sits there. It still exists. That reservation still exists, and so did that coupon. But I don't even know how to get through to someone that coupon needs to be refunded to my account. I believe it's AI that I'm speaking to, and I don't believe it has any idea of consequence. Telling me that, it just doesn't work that way. There's nothing we can do. Thank you. People don't behave this way, right? So I think that AI is being way overshot, much like the internet in 1999. It's not that the internet wasn't real, that the capabilities weren't real. We experience them now, but it took well over a decade before the internet became anything like we were being pitched from 1996 to 1999. I believe that's where we are in AI. And any company allowing this stuff to be involved in refunds and client complaints and service complaints, in my mind, is going to lose revenue. I'll tell you right now, I will never use Airbnb again. If I can't get that money refunded to my account, I guess it's lost because I don't even want their coupon because I'll never use their service again. This has been an absolute nightmare, a nightmare that they created and then continued to create. So I want to look at these companies and I want to see what the charts tell us. As we've discussed when it comes to artificial intelligence and the biggest players in artificial intelligence, they're definitely not in a bubble. Is sentiment way too high in these companies? Yes. Is it way too optimistic? Yes. Certainly not a bubble. But with AI trading, which I think is nothing more than computer trading, honestly, it's machine learning. It doesn't seem to take on the ability to understand what's going on within a chart. It seems to understand levels and it just follows these levels, which could lead to big problems in the future, but also it's really, really easy to trade against, which has made my life extremely easy lately. And you'll see when you look at my accuracy rate on all the forecasting I do. And I can do forecasts for a month, I can do forecasts for a day. In summertime, timing is a little off simply because you don't know when volume is going to exist and when it's not going to exist. For example, last week, volume was double what we've seen in the last 10 weeks. So last week had double the volume of what we've seen in the last 10 weeks. Now, that's at a high price. There's other things that can be said about that. But for now, let's get into these companies. So we're going to talk about Amazon, PayPal, Bank of America, American Express, HSBC, Airbnb, and who am I forgetting? MasterCard. Let's take a look at these companies and see what we see. But I want you to understand why I said what I said. Why we're going to even look at them in the first place, because I think anything dealing in finance, when it comes to this artificial intelligence, it doesn't understand that humans are broke right now. It doesn't understand that you can't just hold our money for 3 weeks because that's the process. You have to expedite things. You have to care, and it doesn't, and it shows. And boy, is it frustrating. Wait until you have a problem. All right, let's take a look. Let's get over there and start looking. We'll look at Amazon first. Even Amazon pops up in just about everything nowadays. And I know that, but the fact of the matter is it pops up in just about everything. And I'm not here to change that. So let's take a look at Amazon. AMZN. We're going to look at a monthly, and you're going to see a lot of what I told you about last week in these charts with these companies. Now, Amazon is still back at the 2021 highs because of the meteoric rise it had. It hasn't broken out like the NASDAQ. Amazon doesn't have relative strength to its index. It's not really a great stock to be playing at the moment. And the fact is, last week, there's not a lot of volume on it either. And you're right back into those 2021 highs. So 2020, 21 highs, you're still sitting there. Amazon's not a great stock to look at. Has there been impact? Let's take a look. Big bars off of a high price. That's on high volume, so it doesn't matter here. Amazon's just not a company I would be interested in looking at right now, so we're not going to. Why out of a company that is not worth looking at? It looks to me like Amazon's going to have to come back to 160 in the next 2 months period. I don't think you can stop that. That's where it's going. Let's take a look here. That's a 4-hour. Yeah, I mean, even when it dips down, even the buy the dip philosophy on Amazon it doesn't exist. Amazon's going to fall. The price is going to fall. The company itself isn't going to go anywhere. Right now, it's QVC via the internet with delivery option. It's not going anywhere. Let's go ahead and take a look at PayPal. And by the way, Amazon obviously very well thought through in its design. I'm not making fun of that. I look at things based on the stock price itself. I don't really care about the company, and neither should you, because that has nothing to do with what the stock price does. The stock price has everything to do with whether institutional money is buying or selling that position, and whether that position has any real bearing on institutional funds. As you can see, PayPal here absolutely tanked. I haven't looked at this in forever in 2021. It's not come back. In fact, it's fallen even further. So zero relative strength compared to the index. Let's zoom in a little bit so we can get away from that cliff dive it took. Remember, PayPal had no competition, guys. None. Zero competition. It's filling gaps on the way up, and it's selling. See, this stock looks poised to continue to fall as well. So we're not really interested in it. PayPal has competition now. It is not the only game in town. And the fact that they were so quick to jump on to some of the things that they were so quick to jump onto, I'm certain you know what I'm referencing here. That's going to make them pay. So we have Bank of America and American Express. Let's look at Bank of America. Once competition entered the field and they weren't the only game in town, let's get rid of that. There we go. All right, Bank of America, here we go. This is 08. We get into 21. This is most financials. Take a look at Bank of America. It's below the 21, 22 highs. But let's take a look at XLF, which is just the financial ETF. Oh, gosh, Bank of America is underperforming its industry substantially. Hey, what did I just say? Why are we looking at these AI-driven companies right now? We're looking at them because I believe they're going to get annihilated by the fact that they're using this stuff. And this is interesting. If this becomes a trend throughout, so each company we've looked at thus far is lagging its underlying index. And now Bank of America is lagging not only its underlying index, but its underlying sector and its underlying security. Industry. Its underlying index, its underlying sector, and its underlying industry. Is that completely tied to AI? I'm not telling you it's completely tied to AI, but I will tell you that that's a unique, that's quite the coincidence. How about that? Yeah, you get a pop up on volume, Bank of America, and then it's going to suck down to fill that gap without a doubt. This thing isn't going anywhere. Yeah, this stock isn't going anywhere. Look at the volume at that high price, which is, you can count on that being a reversal. Bank of America is ugly, isn't it? That's one ugly stock. Oh my goodness. So you don't have any. So no one cares about this thing unless it's down to $36. Right now you're at 42.50. Let's go down to 1 hour. Mm. Yeah, so 40, it'll have to drop 5% before it means anything. I mean, it's coming down 5%, period. See, because look at the volume at these high prices. This is selling, everyone. The stock's being sold. It just is. That's it. Stock's being sold. I'm not going to put a target on this just because it's junk. You shouldn't play it. There's no reason to play it. It's not a great short and it's not a great long. Bank of America. Oh, American Express and then MasterCard. Okay. AXP. What do you look now? Okay. There's some strength for you. American Express has a lot of strength. Why do you think that is? Could it be up 22% from the 2021 highs because everybody's going broke and paying tons of interest on credit cards? I would say that's most likely the answer. Yes, of course. We don't evaluate positions based on that naturally. It has a breakout through 200 and it never returns. So guess what? This is probably, let's see, that's a weekly chart, everybody. So you don't want to go off of weekly charts if you're a long-term investor, if you're looking at this thing over the next 5 years, if that's you look at things, you say, hey, what's going to happen over the next this is probably the next 2 to 3 years. What will happen based on this weekly chart? You're hitting 200. So that's a 22% drop in the next, 2 years, right? So as you zoom in, you get a closer picture. And this is why you say 2 years. See, 200 is way up here, but guess what? You can't even see that previous high anymore. And a daily takes you 12 to 18 months, and you can't even see the previous high. So right now you have this gap up here that I would say, so you're going to look to fill that. So this is why I tell everyone, if you have not gone through and done one-on-ones with me or been part of my mentorship program, this is very difficult information to use because right now your closest target is up here at 248. Right? That's where it's at, which is about a 1.5% above you. That's your near-term target is 248. You can see that it bounced up to, oh my goodness. So this is the buy the dip mentality right here. Down at the bottom, this is the standard buy the dip mentality. And by the way, a lot of this machine learning that's doing this trading and has humans following it, of course it's going to do that. Buy the dip is the process. This machine won't know that buy the dip is dead until long after it gets crushed. It just won't, right? That's why you have to have a human being that understands markets are run by human emotion and cash flow. A machine just runs off of level. I can tell you right now, with short interest as low as it is, with dealer gamma heading, I forget what it was, 14 billion back down to 4.3 billion or something in one day. What do you think that does? What do you think that does to a market? And I'll tell you right now, the human emotion is the biggest driver of any market and the biggest, it affects the market the most. Now, if you want to pick a level for American Express, your near-term level over the next few days is obviously going to be about 248, right? But this is nothing impressive. Would I say that our thought on AI has affected or was proven or disproven through American Express? I would say the first few stocks we looked at, it looked very much proven. With American Express, it seems to have no effect. But when people are going broke and they have no choice but to use their credit cards, I would say that this is to be expected. Let's take a look at MasterCard. It should look a lot like American Express, I would think. No, it's not. So relative strength, if you're looking at a MasterCard or you're looking at American Express, obviously American Express is the way to go. This is a monthly. Yeah, this one is a lot of relative weakness on MasterCard, a lot of relative weakness here. Here's the previous high down at 400. It's coming here. This again is that weekly chart. So it's up 10%. American Express is up about 22%. Obviously, one is doing far better than the other. There's nothing here really worth looking at the moment. Um, it's not a great short. It's certainly not a great long. Do I see upside or downside here? It's filled the gaps. I mean, I would say there's downside here, but there's no target that I would be taking a look at the moment. See, it gaps down. It's a gap filler though, and that means it's running efficiently. And right now, this thing's running efficiently to the downside. MasterCard is running efficiently to the downside. It's filled this upside gap. You have a lot of volume there, which is giving it this little bounce. I would be playing this to the downside, not the upside. That's about all I have to say about MasterCard. Let's take a look at HSBC and Airbnb. Let's go to a monthly. By the way, everybody, I find it best when I'm going through different positions to make sure that I'm starting a monthly chart so that the twist of what's going on. Remember, the reason we look at a monthly chart is to see if there's some sort of an global economic thing going on, because we can't listen to the media. The media talked about the biggest. Truth is, from a financial standpoint, it wasn't a story at all. How do we know that inflation wasn't a story at all? Let's take a look here real quick. I'm going to swing right back. But I want to show you this because I talk about this all the time. This was a global event in 2008, 2009. That's a global event. This is what happened when institutions actually get frayed for the global economic system, that there's a large event going on. You can even look at 2020, and for 1 second they questioned it, but the entire financial world knew that the COVID conspiracy was not real instantaneously, and they bought everything in sight. However, I'm just telling you, this is exactly what a chart shows you. I'm not making this stuff up. They weren't afraid. You see one bar in 1 month. That's 1 month of fear. That's it. After that, they knew everything was fine. And now you zoom into the so-called inflation fear. Where is the fear there? Can anybody show me? Can anyone show me where there is fear there? I just would love to see it. Look at this. 2020, 2008, 2009. So you're telling me someone's afraid there? Give me a break. And if you don't know that that's what that says, then you really need to get on board and start working with me directly, one-on-one, because one-on-one obviously is the best way to learn this stuff. And if you're in there with your own money and you don't know how to identify trend changes, if last week beat you up and you're looking for guys to tell you it wasn't your fault and learn from that mistake, it was your fault. That was very easy to see coming. Do you have any idea how much money I made last week? I don't care that long short hedge funds had the worst week in the year, or in 2 years, or in 3 years. Let me tell you something about long and short hedge funds. They're long only right now. They're not playing long short. The fact of the matter is, it is not easy to do what I do on here every day, which is show you stocks that are going to rise and show you stocks that are going to fall. I show you stocks like CrowdStrike. I showed you that it was going to run from 377 to 388, and then it was going to dive to 355. Now, that was a month ago that I forecast that, and my forecast hit. And in fact, with the debacle that went on last week, CrowdStrike went down to nearly 305. Can you imagine the money that was made there? But I do this with stocks every single day. You can see this stuff, folks. This is not mysticism, and I'm certainly not faking it. Please go watch my lives, look at the charts that I post. You tell me where my accuracy level is. You evaluate it. All right. I'm not here to tell you you're not doing anything wrong. You are doing something wrong. There are ways to learn this stuff, and you could be learning it. And if you're not, you watch what happens when a real trend shift happens. Because I've watched it. I've watched guys run their options account and their futures account from $1 million to $9 million. Not only do they give the 9 back, they give back their $1 million plus another $1 million. I've watched that I don't know how many times. And I don't work with whales, so I can't tell you what a guy that loses $50 million does, or where, I'm talking about a single guy in a single account. Those guys exist. I don't happen to know them. But I do know guys that do what I just told you over and over and over, and they still tell me that they know what they're doing. It's hilarious. It's unbelievable is what it is. And if that's you, don't lie to yourself about it. Last week was your fault. Make no mistake, it was your fault. Fix it. Don't listen. The game here, you cannot have ego. If you have ego, you're going to lose. You're wasting your time doing this. You got to drop the ego and learn. What, do you think I knew how to do this? I started at A.G. Edwards and Sons in 2003. I didn't know how to do this. I had to learn it, and I learned it because I was willing to accept asset allocation was a farce. It did not work. It was a joke, and that no one was teaching others how to do it. Now, there are people out there teaching. How do you think I learned it? I mainly learned on my own, but it took me a decade. You can spend the decade and probably learn it for yourself too, or you can skip all that, which I wish I would have known someone that knew how to do what I know how to do now, because believe you me, I would have skipped all that. Okay, we have volume in the background on HSBC, and HSBC, look at that. That, folks, is buying. What's this? Here and here. And now, but see, there's just no desire for prices at these levels. As you can see in 2024, HSBC has not gone up at all. So it has no relative strength to its underlying index, right? As we saw with XLF, which is the financial ETF, it's risen significantly in 2024. So this is not good. Let's look at Airbnb. Airbnb. Monthly. Weekly. Oh, gosh. It's ugly. I mean, it's very short-lived, too. I mean, it's brand new, 2021. Yeah, this isn't worth buying. They're gapping it down. There's no volume on it. The gap filled. Now it's reversing. Okay. So I'm going to stop the stream here. In fact, wait, let's do one more thing. Let's go ahead. We broke down the NASDAQ last Friday, right? Let's take a look at the S&P. Let's break it down. We broke down the NASDAQ, by the way, because it is the leading index in this charge. That's why we broke it down. But let's take a look at the S&P. So here's a global incident, 2008, 2009. Again, here's your 2020, right? Your COVID. And then here is the supposed inflation scare that never existed. And I've been saying that now for 4 years. So it never got me. I never bought into it. I've been saying this for 4 years. I can show you plenty of evidence to prove that. The chart proves everything. I know when people with money are afraid because it's right here. I can look at their footprints right here and it will tell me. Now it broke out. Did it return? Almost. Up here that's scary. A lot more volume than the week before. Is it volume that stands out? No, it's still light volume, as a matter of fact. Okay, look, I would love to break down the S&P for you, but there's nothing really to break down. So I'm going to stop this share here and head on back. And listen, I'm sorry that I went on and on about doing one-on-ones with me and doing mentorship, but I get a lot of questions and there's a lot of people watching, and you're out there and you're investing your own money and you don't know when these trend changes are going to happen, and you're not sure how to play it from long-term to short-term. You don't have proper risk management for yourself. You don't have proper cash management for yourself, and you're not even sure what investment management is. And I assure you, it is not simply following the leaders, okay? Everything I just said is not following a trend. If you follow a trend, you'll follow it up and you'll follow it down. And I don't mean you're going to flip your position over and you're going to go short. I know a lot of you think that because you think that 2021 won't happen again. You learned your lesson. It will happen again because you didn't know how to identify a top, and you don't know how to identify a bottom, and then you don't know how to identify individual targets in there. If you can accept that for yourself, you can become a much better investor or trader. If you will just accept that fact that you're getting eaten up on these little moves and you didn't see 2021 coming, if you didn't see that coming, listen to me. 2021 was so obvious. It was as obvious as a semi truck heading at me from 1,000 yards away in the desert. It was so easy to avoid and so easy to play. I can't even express it to you. And that's why I can tell you right now with a lot of confidence that while the volume was up last week, and you never want to see slow times having double or triple the volume, that was 1 week. It's not enough. You get 4 weeks of that in a row, and I don't mean down. I'm talking about trading activity. I'm talking about the footprints of institutional investors. You get another few of those weeks in a row, In the summertime, now that will be a semi truck. And I promise you that my students will all know that it's coming because that will be in my weekly breakdowns that I send them, or semi-weekly breakdowns, depending on what I think I should do. So listen, all of you out there that I love, and thank you so much for watching. I'm not trying to lecture you, but I'm not the David Goggins of finance, but I'll tell you this. I'm not going to sit here and tell you it wasn't your fault. And it's okay. You did your best. You didn't do your best if you didn't see that coming and you're watching me, because I could have shown you that. In fact, I did many times over. Go take a look at how many stocks I had going short in the last 2 weeks and how many of them hit last week. And you tell me that it's luck. You tell me that CrowdStrike going from 400 to 300 in the last month, when I played it to the upside, and then I gave you a target to the upside, and then I played it to the downside, which it way overshot because of last week's incident. How did I know that was coming? I didn't. I knew where institutional money wanted that stock price to go. And that was what I played. I played institutions. I watched what they did, and I did it too, and I do it all day. All of my students are very different. They have different investments. They all have different cash management, and they all have different risk management. So we go through different things. And that's why I love to show a lot of I love to show variations on this show, right? But I can do it with everything. What I do transcends whether it's a commodity, whether it's a stock, whether it's an index, a sector, an industry, a currency. It doesn't matter. I can identify institutional footprints, and then I follow them, and you can too. I'm going to go ahead and throw up. I think everybody at this point knows my Twitter handle because you probably follow me. Some of you probably follow me on there. Also, I think that that most of you are well aware of my email address. I'm going to put it up anyway. It's dmiller@prometheaninvesting.com. I do a mentorship program. I don't have one starting. I'm taking on 5 students by Friday. It looks like I already have 2 pretty serious inquiries that I'll get back to today. So there's probably 3 slots left. I take 5 students only. 5. I don't have more time than that. It takes a lot of guidance. We go through every week. We do education. Then I send off notes. Then we do a Q&A, which most of the time is them wanting me to take a look at what they're doing, give them a evaluation of their position. So it takes a lot of time and it takes a lot of effort. So I only take 5 students at a time. If you're interested, reach out to me. If you're watching this program, then you are already interested by default. That's why you watch me. If you want to know my accuracy rate, go back and take a look. I don't take anything down ever. Never. I take nothing down. Right? All right. Okay. So remember, guys, I'm going to end the show right there. I don't want to keep pitching you. I'm not even pitching you, as a matter of fact. It's your loss if you don't do this. That's the bottom line, because I can help you. You'll make a lot more money. You'll make 100 times, thousands times in percentage return on your investment working with me. You have to realize that, though. I'm not here to convince you. All right, remember, everybody, if you're not good up here, you're not good anywhere. If you're not feeling good today, remember, you've not failed yet, and I don't believe you will now. How do I know that? Because you're still here. You're watching this program right now. And thank you so much. I love having you guys. Get out in the sun. Smile. Fake it till you make it, baby. Get out there and laugh. Life is good. No matter how hard life is, you got to laugh at it. Because if you don't laugh, you'll cry, and crying doesn't help anything, right? Just get you frozen. Don't freeze up. Get out there and make moves. Remember, every day above ground is a good day. I look forward to hearing from some of you. I'm really excited for my 5 new students. I love getting started with new students. All right. I'll see you.